learners, and welcome to the crash course on banking and investments. Before we start talking about the course, let's start with some thought-provoking questions related to your financial habits, goals, and decisions. Do you know how much money you spent last month on online shopping? Or on the food you ordered from your favorite restaurant? Or wait a minute, do you also spend significant portion of your income in the first 15 days of the month? I bet we all have been in such situations where we have treated ourselves to new gifts or a nice meal but lost track of how much we actually spent, which often leads to the dreaded money crunch towards the end of the month. If you have also faced these challenges, then this crash course on banking and investments is the one for you. No prior knowledge of finance or banking is required to start this course. It's open to students, parents, professionals, or anyone aiming to take charge of their financial future. Before we delve deep into the course, let me introduce myself and my organization. I, Tanvi Kaul, will be your trainer throughout this course. This course has been brought to you by Tech Mahindra Foundation, and I oversee the learning and development vertical of the same. Founded in the year 2006, Tech Mahindra Foundation is the corporate social responsibility arm of Tech Mahindra Limited, a Mahindra Group company. We work extensively on the vision of empowerment through education with three key focus areas: education, employability, and disability to empower all to rise. In this short course, we explore the basics of banking and investments. The term financial literacy is the ability to make smart financial decisions. Here, S stands for specific, which means clearly define your financial goals like buying a house or saving for retirement. Having specific goals helps you stay focused. M stands for measurable, which means our financial goals should be quantifiable so that you can track your progress. A stands for achievable. Your financial goals should be realistic and within reach. R stands for relevant. Your financial goals should align with the values and priorities that you have. They should be meaningful to you and motivate you to take actions. And finally, T stands for timely. That means setting up deadlines for achieving your goals. This adds a sense of urgency and helps you to stay on track. These are the basic principles of financial literacy which will help you plan for the future, maximize the value of your income effectively, and become self-sufficient. Before diving deep into the basics of banking, investments, and savings, let's learn about some of the key financial terminologies. You can pause this video and take a screenshot of these terminologies. By understanding these terms, you will be better equipped to understand this course and take control of your financial future. Let's start with the basics of banking. Having a fundamental understanding of banks is integral for achieving financial independence. This includes having knowledge about banks, different types of bank accounts, the different products and services offered by the banks. So, what are banks? Banks are financial institutions that are licensed to accept deposits and provide credit and a safe space to store your cash and essential services. Banks can be classified into commercial banks like Citibank or SBI, small finance bank like AU Small Finance or the Fincar Small Finance Bank, payments bank like Airtel Payment Bank or Jio Payment Bank, and cooperative bank. Now that we know about the different types of banks, let's learn about the different types of bank accounts. Bank accounts can be classified into two types: demand deposits and term deposits. Demand deposits consist of savings account and current account, and term deposits consist of fixed deposit and recurring deposits. In savings account, the account holder can withdraw any amount of funds available from the account whenever they want. The interest in these accounts is low or zero. Let's learn from an example. Ishita recently turned 18 and got 20,000 cash from her friends and family as a birthday gift. To save her money and avoid keeping cash at home, she opens a savings account in a bank. This helps her safely save her money and also earn a little extra extra money over time through interest. Next comes the current account. This account is suitable for businessmen and women who have to make multiple transactions on a daily basis. A current account provides platform for managing your business finances separate from your personal finances. For example, Ishita decides to start a business of selling artifacts which requires her to make multiple transactions on a daily basis. She opens a current account. This account suits her. As a business owner, it will allow her to make multiple transactions daily to different stakeholders. Through this account, she does not receive any interest but can easily pay her suppliers and receive payments from customers, helping her business run smoothly. Now we move on to term deposit accounts. We will start with fixed deposit accounts. FDs are one of the best ways to secure your money by investing it in a fixed deposit for a fixed term. It not only helps you save money but also helps you earn interest in it. For example, through the artifact business, Ishita was able to save a lump sum of INR 50,000 which she doesn't need in the near future. She decides to open a fixed deposit account for a fixed term. Let's take that to be 5 years at an interest rate of 8%. In this case, Ishita will earn a higher interest rate than a regular savings account and will not be able to withdraw this money for a period of 5 years. By end of the 5 years, she will have an rupees 50,000 plus an addition of 20,000 as interest, so a total of 70,000. Moving on to recurring accounts. Recurring deposit enables a person to invest a fixed amount of money at regular intervals. This type of account is suggested for individuals who don't have a lump sum amount at hand but would like to save money and earn additional interest similar to FDs. This type of account will help you instill the habit of savings. For example, after making a FD, Ishita does not have a lump sum amount but manages to save, say, 10,000 rupees every month. She opens a recurring deposit account where she deposits 10,000 rupees every month for a fixed period of time. This systematic approach helps her save money as well as earn interest. This type of account is beneficial for a salaried individual. These accounts offer different features and benefits, so it's important to choose the one that suits you. Banks offer a variety of services to meet the financial needs of their customers, like online and mobile banking, which allows customers to make transactions, check account balances, or any banking activity 24/7 without having to visit a physical branch through their official website or mobile app. Next comes credit cards and debit cards. Credit cards and debit cards can be used to make transactions like buying, transferring, borrowing, or withdrawing money. Next is loans. Banks offer a variety of loans to finance the needs of their customers like personal loans, home loans, education loans, car loans, etc. These loans are often given at an interest which needs to be repaid to the bank. Next come lockers. Banks also offer a safe deposit to their clients to store their valuables safely. Next comes insurance services. Insurance is like a safety net. It's a way to protect yourself from unexpected events. Here you pay a small amount of money called premium to the insurance company for a fixed period of time. In return, the insurance company promises to help you if something goes wrong, like an accident or death. Finally, banks offer a variety of investment services that allow you to save money and allocate funds to generate returns and increase your wealth. You can invest in gold, houses, stocks, bonds, or fixed deposits. As a beginner, you must familiarize yourself with the basics of investing before you begin. Whenever you are budgeting, follow the 50-20-30 rule where you allocate 50% of your income to basic needs like food, water, shelter, clothing, 30% to your wants like watching a movie, treating yourself once in a while, and 20% as savings. Finally, we have come to the end of the course. Throughout the course, we talked about the basics of banking, types of investments, and savings. I hope you feel more confident about handling your finances and make smart financial decisions. So, let's make the most of our financial opportunities. All the best for your future endeavors.